Good afternoon. If you're just joining us, we'll be getting started in just a couple of minutes. Good afternoon. My name is Garrett Sheehan. We'll be getting started in just a couple of minutes. We're going to let a few more people join us, and then we'll get underway with our question and answer session on the new stimulus program. All right, well, we'll get started again. Thank you so much for taking the time to join us. My name is Garrett Sheehan. I'm President and CEO of the Greater New Haven Chamber of Commerce and Quinnipiac Chamber of Commerce. We're excited to talk about the stimulus programs. It was a long time coming, waiting for another round of PPP and renewal of other programs as well. That happened at the end of last year, and so now those have rolled out. The portals are open with the banks and other financial institutions. And so we're ready to talk about your questions and answers. And we have assembled a large panel of experts to touch on all of the different aspects of it. I want to thank our sponsors. We continue to be supported by UI, Connecticut Natural Gas, and Southern Connecticut Gas, as well as our annual investors. You see them scrolling on the screen here. We've put these slides up every event that we've done, and we've done many webinars, but we can't thank our sponsors enough. Their support throughout the year really has allowed us to continue to put on this type of programming for you. As I mentioned, we have a great panel. We have Michael Maximiou, a partner with Marcum, Michael Didadio, principal with Marcum, Brian Kerrigan, tax partner at Whittlesey, Carolyn Welch, she's Senior Vice President and Director of Commercial Lending at Chelsea Groton Bank, and Joe Williams, who is a business advisor and works in the New Haven area specifically. Although Joe, we both got to get back in the office with the Connecticut Small Business Development Center, and he's normally located at the Chamber in New Haven. So I'm going to start with each of our panelists and let them speak for a couple of minutes about a topic or issue that they're seeing right now, and then we'll get right into your questions. So Mike Maximiou, let me start off with you, Mike.
Sure. Mike Maximiou from Marcum. I think one of the biggest questions we're getting from clients now is as they're looking at the revenue reduction that's required for PPP2, they're also taking a look at, do they also qualify for the employer retention tax credit with the same revenue reduction, either for 2020 or 21. So there's a lot of questions about the interaction between those two, which is super facts and circumstances specific for every single borrower. There's nothing like global about it after you get by the initial tests. So that we've been doing a lot of individual help with those items.
Great. And I know we'll get into that. And I think I've been asking you, Mike, about that for since even before it came out. So Michael Dadio, Mike, you want to talk about that as well, or what topics are you seeing?
Well, certainly the employee retention credit from a tax side is perhaps the most significant. The clarification that expenses that were paid by PPP loans are deductible, which was not the position of the IRS previously, is an important item. It creates all kinds of basis issues for partnerships and S corporations, which are to some degree unresolved. The cash stimulus program is always engenders questions. Their checks are going out now, and probably the deferral of the employee share of payroll tax, which was part of President Trump's executive order, went from September to the end of the year. Payment period for that was through April. Now it's been extended through December of 2021.
Great, thanks, Mike. Let me turn to Carolyn Welch, and Carolyn's with Chelsea Groton Bank. And Carolyn, I know the bank's typically not doing a lot of advising, but you are running the portals, and that's how people actually get their applications in. What are you seeing so far?
Great question, Garrett, and thank you so much for the opportunity to speak to everybody today. So you're right. We try to find that balance between not advising clients, but yet directing them to the guidance, and working with them and referring them to their accountants and such. But we found there's nothing like having a meaningful conversation with somebody. So we found that it's best if they sit with their commercial lender and if they talk about what their situation is, because much like what Mike said, there's a lot of questions out there about the revenue reduction. There's a lot of questions about 2019 versus 2020. What should they do? How should they go about it? And so we're having a lot of meaningful conversations about that with the borrowers. So you're right. So it's a fine line and it's a balance, but it's really important to have those conversations.
Great, thanks, Carolyn. And Joe Williams, Connecticut Small Business Development Center. Joe?
Thanks, Garrett, for having me. Good afternoon, everyone. My department, we're finding everything. As you know, we get the direct final guidelines from SBA because we're an SBA resource partner. And so across the board, whether it's the extension of the EIDL to the end of the year of 2021, for those who have not yet applied and didn't receive all of their advance, they are going to receive their advance. And the clarification is you don't have to apply. The SBA is actually going to reach out directly through emails to those individuals to make them whole. That was part of the CARES Act, monies ran out or you didn't receive it because our administrator in the SBA had made a decision to spread the money out. And so the HEROES Act has corrected that, and SBA in the next few weeks will be getting to those individuals. In regards to the PPP, one of the biggest things is the 30% reduction. Very important. Looking at 2019 as well as 20, as many of the panelists have already alluded to, this is a big concern for many of the businesses that we talk to across the board. And how do you deal with the tax credits that go along with that, that are part of the act as well? One thing to take a note, we are still receiving further guidance from Treasury, from SBA. I think we just updated some new news just the other day, yesterday. We sent some new correspondence from Washington. I did speak to Catherine Marks, the state director of the SBA the other day, and she had some new guidance for us as well. So I would just echo to say to everyone to continue to work with your accountants, your attorneys, and your bankers. And truly, if you haven't gotten your forgiveness, please work on that. I think you should get that out of the way even before you have them to March 14th. If you've already applied for PPP 1 and now you want to do phase 2 of the PPP, please, 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 I can't stress it enough, make sure that you've gotten your loan forgiven on the first PPP. And then looking at the next 8 to 24 weeks process of the phase 2 of working with your local lenders. We now know, it wasn't like this 2 weeks ago. We first started when the act came about, only 2 banks, which were dealing with low-income communities and minorities, women and veterans, which was Nutmeg and New Haven's Bank. And now that most banks are now, or if not all of them, are now participating, which that's what we really were looking for. And then if you don't know if your bank is participating, we do have links on our website which list all of the banks that are participating. I know as of 2 days ago, Bank of America finally decided to be added back into it. They had declined very early on in the first week of January, but since then they've been included in that. So truly, there are answers. Don't feel that you're alone. I think it's an easier process now. I think we've had enough practice. Enough time has gone by. Congress has gotten some things right in the new legislation that has passed. So I think unlike the spring where it was really, really hectic, where we're all just scrambling, trying to find answers for our clients, I think this go around, it's been smoother, definitely from a transition standpoint. I think SBA has been more responsive as far as the waiting is concerned. For those who apply for the EIDL that are in the reconsideration, the real problem is not Treasury or the SBA. It's actually dealing with the IRS. The IRS is actually overwhelmed with individuals applying for that 4506T, which is the transmittal form that is sent to the IRS to verify taxes. Right now, the IRS is 5 to 6 months behind. And so that is holding up the process. It's not that your application is not being overlooked or anything of that nature. It's simply the verification process between the SBA and at IRS. They are working on it. We've, as you know, with the insurrection a week and a half ago, many of the employees that were supposed to go back to their office were not able to. So that kind of delayed things as well. But as of the inauguration, we're starting to work in our offices at the federal level. So you should see some of that now, of that backlog easing up. So with that, Garrett, back to you.
All right, thanks, Joe. And Brian Kerrigan with Whittlesey, and Brian joined us right after the new stimulus had passed. And so, Brian, we appreciated you jumping right into it, but now you've had a little bit more time to take a look at everything too.
Yeah, I think we've certainly encountered the issues that the rest of the panelists discussed. I'll try to highlight an issue that no one's really talked about yet, and I think it's the simplified loan forgiveness for loans under 150,000. The SBA had 24 days to issue a one-page, basically, application for forgiveness for these smaller loans. They issued it a couple days ago at this point. We are hearing that some banks have suspended the forgiveness process pending the outcome of the second draw. So they were going to focus their time and energies on the second draw, and we're going to push the forgiveness. So the process is now in place to do the one-page forgiveness, but just understand that you'll have to talk to your banks individually to see whether they're accepting forgiveness applications at this point.
Right. Well, let me jump back to something Mike said at the very beginning, and that was the employer retention tax credit. And I'll just tee it up in saying that in PPP1, you could either take Paycheck Protection Program or the employer tax credit. You could not take both. And the employer tax credit was a tax credit on your federal payroll taxes, I believe maxed out at $5,000 per employee. That all changed in the new stimulus, now allowing you to do both employer retention tax credit and PPP. And Mike, maybe I'll start with you since you brought it up. But there is a lot of detail in between there, and a lot of situational awareness depending on the facts of your specific case.
Yeah, thanks, Garrett. So the qualifications for PPP1, PPP2, and the employer retention tax credit, which we abbreviate as ERC, they're all different. So it's not that everybody can automatically qualify for an ERC, and because they had a PPP1 that they're good. You have to follow the ERC tests. Primary one is a 50% revenue reduction when you're looking at a quarter in 2020 over the same quarter in 2019. That kind of opens the door for you. And then your door closes if at the end of the quarter where you hit 80%. So like you could be open in the second quarter, you hit 90% revenue in the third, you close at the end of the third quarter. You can also reopen it in the fourth quarter if you got another 50% drop. So like you can kind of see how many different iterations and permutations just for the ERC. And that's just to like be able to use it. Now you got to figure out which wages can I use, because you've got your PPP forgiveness app, which may or may not be in. You've put a bunch of wages on that. You can't use the same wage for both. There's a lot of things that you have to consider if you are eligible for both. But for smaller companies, like $5,000 an employee, if you can get it on top of the PPP money, that's real cash in hand that could be helpful. So certain industries in the area that still aren't back up to full capacity, they could really use that little cash infusion for them based on paying their employees, still having them stick around. There's tons more details around it. I'm sure that Brian and Mike Daddio know some more about it too, but I'll give someone else a chance to chat.
Great, thanks. Anyone else want to jump in?
The thing I wanted to point out is because of the change, people who might have been subject because they had the PPP loan to disallowance now need to go back and review the 2020 circumstances to see whether they can take the credit. And if you were a large employer, since you had more than 100 employees in 2019, 100 full-time employees, then you were limited in terms of the amount of wages that would qualify. It was only for wages paid to people who weren't providing service during the hours you were paying them. But if you were a small employer up to 100, you could get the credit on all the wages you paid, whether your employees were providing service or not. So particularly for small employers who may have gotten the PPP money, it's important to look at. The credit has changed for 21. It's become even more valuable because instead of it being 50% on 10,000 of wages for the entire year, it's 70% of 10,000 of wages for a quarter. And the definition of a large employer has been reduced so that more people are considered to be non-large employers, because the large employer definition is somebody who has more than 500 employees in 2019. So it's going to be a much more valuable credit, even if it wouldn't have applied to you in 2020, you need to review that for 2021.
Anyone else want to jump in?
Yeah, the only thing I would add to that is, you can't, as these guys stated, you can't use the same payroll cost for ERC that you use for PPP. So when you're thinking about that 2021 credit, there's probably some strategy around how you maximize the ERC and how you're able to fully use the PPP fund so that you can maximize your benefits.
Yeah, if I might just add, the law contains an ordering rule where the first dollars that you pay really are eligible for the credit, and then the balance are eligible for PPP. And the law provides that there will be an election that you can make in order to elect out of that ordering rule. We're waiting for guidance from IRS in terms of how you make that election, and probably just using the funds for PPP and not taking the credit on it may be the methodology, but we don't know yet.
And so the important takeaway for everyone here, though, is that there are 2 additional buckets that you can access potentially. Now, if you are taking PPP, you can look back to your 2020 numbers, and there's looking forward here in 2021. And, as we're talking about differences, there is still a difference in PPP-1 and PPP-2. Does anyone want to get on that? Because I know a lot of what we've been talking about is the second draw on the Paycheck Protection Program. But there are organizations that did not take advantage of PPP last year, so it would be their first draw. And it's my understanding, you guys can correct me if I'm wrong, that there are some differences in how those are evaluated. Anyone want to get in there?
I could maybe start, and certainly the accountants will have a wealth of knowledge as well. Yeah, there's a lot of subtle differences. One is the number of employees. So the number of employees, the maximum number of employees, if you're taking advantage of number 2 is 300. With the first one, it was 500. The size of the loan. But I think when people are evaluating, and maybe we'll get into the differences later we found, and a lot of people misunderstand, that if they've already applied for 1 and they're going for 2, if they base it on 19's numbers, it can be really a very simplistic approach to it. All they have to do is show the revenue drop. So there's a lot of misunderstanding out there about that as well. But there's some subtle differences about number of employees, size of the loan. If they don't have to necessarily show the revenue drop for round 1, but they do for round 2. And maybe my accountant colleagues can add in some of the other accounting subtleties. Those are the things that right out of the box, we ask them, are you eligible, in determining those things. And there's a lot of people looking for round 1, more than we thought. We thought most of it would be coming from round 2, and the majority is. But there are a lot of people looking for round 1 money that had not applied for round 1, which we were surprised by.
And I guess what I would add to that is there's some new organizations that now can get a PPP-1. So your
Right.
Chambers of Commerce, your 501c6s, your destination marketing organizations, potentially your newspapers, news stations. So there are some entities that were not eligible in the first round, in the first incarnation of PPP, that are now eligible.
I think that's a really valid point, Brian. In Chambers of Commerce, for example. Yeah, I think that's a really, really great point.
And Joe, are you seeing, when you're talking to businesses, there was a lot of hesitation in round 1 as to using PPP. Obviously, a lot of people accessed it, but concerns about, well, am I going to bring my staff back if I don't have work for them? Things like that. And I have gotten a sense that some people looked at it once, that said it wasn't for me, and then never looked at it again. But things even changed last summer in some of the flexibility and requirements around PPP.
Yeah, Gary, we have seen that. I think in the spring that was an unknown for many businesses. I think that's why we're starting to see so many new businesses that hadn't applied now apply. They're realizing that this is the new normal under the circumstances of the pandemic, that now we have the vaccines and things are starting to open up a little bit, that now maybe I should apply. And some of the rules still apply, whether you're doing one or two. They just have to be aware of that. I think some are, the panelists have already discussed, lowering from 500 to 300, the rules that engaging for forgivable, what is forgivable. There's parts of the PPP that are not forgivable, especially as it relates to the EIDL, especially if you received it between January 31st of 2020 and April 3rd. Some of those are not part of the forgivable portion. So people have to be careful and really understand what are really in the guidelines coming from Treasury and from the SBA as it relates to that. So we're seeing that all the time. I just would encourage that if you haven't applied, you should apply. I think they've made PPP better, less restrictive. They've actually opened up some other areas that you can actually utilize the funds for. The tax credit definitely helps with that. So it's really the level of understanding. I think what everyone should take away is that you do have to have some kind of level of expertise when you're dealing with the IRS as far as what the guidelines of what you can take as it relates to the credit and when to take it, how to take it. So, and it should be a strategy. I don't think you should go into this blindly at all. There's wonderful programs, but unless you know the nuances fully, you're kind of in the dark. And so what you want to do is take advantage of experts that are assembled here in this panelist and moving forward. But I definitely encourage it. It's a wonderful program.
And let me let everyone know, if you have questions, you can start putting those in the chat. We'll start throwing those up to our panelists. One question I've received a couple of times this week, around the first PPP, we were talking a lot about total number of employees. If they're not working, you can bring them back onto the payroll. A lot of companies have changed dramatically since where they were last year. They may not have the same number of employees. They've shifted the way they do work, but will they still be using that baseline employee number that they had in 2019 or 2020? And then how does that apply to their forgiveness? Does anyone want to jump on that?
I can start.
Go ahead, Mike.
We've been looking through the guidance each day that's been issued, and to be honest, if we wait a day to read it, it seems like forever because we get 100 questions. And the most recent guidance didn't change the reference periods, which is how we refer to them. So the 2019 timeframe of February 15th to June 30th is one reference period. Your alternative one is January 1st of 20 to February 29th of 20 for how many full-time equivalents you had. And that's kind of your threshold. If you get over that number, you won't have any reduction in the expenses that are eligible for forgiveness. To put some numbers to it, if you had 20 employees in 2019 and you had 15 the first 2 months of 2020, you'd pick 15 at the smaller threshold. And then if you had 12 during your covered period for PPP2, you lose out on 20% of your eligible expenses. It doesn't mean your forgiveness drops by 20%. It means your expenses drop by 20. So if you take a $100,000 loan and you spend $150,000 on payroll and eligible costs over the course of your 24 weeks, you take 20% off the 150 you spent. So that's a minus 30. So 150 minus 30 still leaves you with 120 eligible. That's still more than your $100,000 loan. You still get full forgiveness, assuming all the other qualifications, et cetera. It's a super common question we get. People are worried about, missing one employee and having to repay a loan. That's not the way the application is laid out. Those reductions only reduce your eligible expenses. So with a long time period to spread your costs over, you can have an FTE reduction and still get your full forgiveness.
And here's a little subtlety that a lot of people don't realize. You can use your 2019 numbers, you can use your 2019 data, and it makes it a lot easier. Your loan amount can conceivably be exactly the same. And the only information that you have to provide is a reduction in your revenues and the current number of employees. So pretty interesting that it's that simplified. And you're obviously attesting to that. And you should obviously go through some of those machinations with your accountant, but it's pretty much that simplified if you use your 19 numbers.
Great.
And Garrett, there's some flexibility. One of the issues that we had in the first round was this: does it have to be an 8-week or a 24-week period? And I think the new legislation really clarified that it can be anywhere between an 8-week and a 24-week period. So, companies are generally going to have the opportunity to use more than the 2.5 times average monthly payroll expense during, over a 16 to 24-week period.
Good to
Right.
know.
Plus, there's other expenses that are now eligible that weren't before.
And the other thing is there was a provision that if you reinstated your employees by 12/31, and they now believe it's by the end loan period, that could be a safe harbor for achieving full forgiveness if you didn't have the expenses to be able to do it.
Gotcha. Had a question here, and this is another new feature of the new stimulus, shuttered venues. It's a separate type of PPP-like program. Does anyone want to take a stab at explaining that?
Yeah, well, the shuttered venue, it's really dealing with, those that qualify, museums and performance type of occupations, it's up to 45% of your revenue loss is how the shuttered venues actually. And I do believe it's you had to be fully operational, of course, before February 29th of 2020. That's one of the rules regarding it. It's also dealing with a high significant amount of revenue loss, north of 70%. Really, in some cases, it's actually 90% is the threshold. So unlike the PPP, that's just dealing with less than 30%, revenue loss, when you're dealing with the shuttered venue, you're looking at higher numbers. When you look at our cinemas, you look at the Schubert Theater, the Palace, and things like that, they've totally been shut down this whole entire time. They've lost a significant amount, 70, 90% of almost 100% of their revenue. And so what the shuttered shuttered venue portion of the HEROES Act is actually doing is trying to replace that lost revenue in the last year. And that's really the bottom line to it. Some of the numbers as it relates to it, as far as you can go up to $10 million. So it's not by any means a small amount of money, but it also covers chains such as cinemas and things of that nature. That's why the threshold, unlike the PPP, has been reduced to 2 million. The shuttered venue has been remained at 10 million, which was the original PPP.
And the only thing I would add to Joe's comments.
Sorry, Carolyn.
No, that's okay. The only thing I would add to Joe's comments is that you're not eligible for a PPP loan on top of that.
Really important point. And someone in the chat did put in asking if art galleries are included in that shuttered venue grouping.
I know for a fact, I did have an outline of which particular, matter of fact, it's performing arts organization operators, museum operators, motion picture theater operators, talent representatives who can demonstrate at least 25% reduction in revenue. That is actually the guidelines coming from SBA. Within that, if you want to know further, simply call our office or something, and then we can get further clarification directly from the district office from the SBA, because that is actually expanding as we speak. So it's something so new.
We had another question in here, and I'm just trying to understand it. It was someone asking about if they switch to PPP manufacturing. I'm assuming that's personal protection equipment that they're talking about. But I think that gets to something we're discussing, is that if you pivoted your business has changed dramatically, you can still be eligible under PPP, even though your total employment may have changed. A lot of different types of expenses or losses that you're showing have changed. Carolyn, you started touching on it a few minutes before. There's also a lot more things that you can include in the forgiveness side of the PPP loan. Yeah,
there's a lot more expenses that can be forgiven this time. Last year they shifted, initially it was a 75-25 shift between the payroll and the expenses. And that shifted last year into 60-40. So the percentages are still the same. It's just under the expense column, there's a lot more expenses that they can take advantage of. And I would say that what I would recommend them to do is I would look at the guidance, work with their accountants, to make sure that they are fully aware of what they can and can't ask for forgiveness on. Having an accounting and a banker relationship in this is critical. So.
Yeah, that's a good point too. If anyone out there is struggling with that, I know we have several of our chamber partners who have offered that they're willing to help out with very small businesses. So you can reach out to the chamber. We can try to connect you with someone. But as we talk about PPP2, I know a lot of banks right now, accountants are working on the forgiveness side of PPP1 draws from the last year. And there were some tax law changes that were incorporated into the stimulus bill. Anyone want to talk a little bit about forgiveness and some of the things to look out for right now if you're in that process of getting forgiveness for your first loan?
I'll touch a couple of things though. Let's go back to the shortest venue. What's critical since the legislation was signed and the shortest venue went in, the fourth 14 days, $2 billion has been set aside for that, and those are for businesses that have lost 90% or greater revenue. And then 14 days after, those who have lost 70% of revenue are then can qualify. So much like and what people have experienced, PPP has a start date and an end date. If you notice in the new act, it's not only time periods that you're dealing with, time constraints. There's only so much limited amount of resources and money. So it's important that one, apply early, not often, but early, if you will, but look at the qualifiers. And then going to the PPP, I know you mentioned about allowable expenses. Some of the new allowable expenses that weren't in the first PPP is really dealing with supplier costs. That's been included. Work protection expenditures is in there as well. Operational expenditures, which wasn't in the first one, was very limited. There's only like 4 or 5 key topics in the first PPP. And the second one, they've actually extended to more of a broader thinking, more not just payroll, but actually operational, having you to work within the business. It even covers some property damage costs that are covered into the PPP under the second one as well, under the act. So people should be aware of that in that instance. So to go to your last question, Garrett, that escapes me for a second.
Dealing with tax implications on forgiveness.
Oh yeah. Well, the rules now, the taxes with reference to the PPP and the EIDL in the new act, it actually corrected that. Many accountants and attorneys went to the Congress and said, hey, this is kind of unfair of double taxation. And so a period of that is actually exempt. And that is what's in the new guidelines of which portion is exempt as it relates to PPP. Because what they said, it starts out as a loan, but then once it's forgiven, do we have to claim it on our taxes? And that's something that we have gotten clarification on through the guidelines, that you're not going to have to do that. So you're not going to be penalized for receiving the PPP, which we thought that in the first PPP, many people said, I can't afford, be able to keep my doors open, and then I'm going to hit with this tax burden later on. So we've made that exempt, and that's part of the guideline.
However, there was an issue that was raised under prior law, which has now created a bigger issue under the change, which is that when these items are now deductible, particularly if you're a partnership or if you're an S corporation, you may now be generating a deductible loss at the entity level. Now you need to examine the base tax basis rules and the tax at-risk rules, because you may generate a loss and not have basis or at-risk amount to be able to use it. It would be nice if you know you were going to be forgiven on the loan to be able to pick that up as tax-exempt income and produce basis in 2020. But if you haven't been forgiven, right now it looks as if you have to wait to do that. So you may not be able to get the benefit of now the deductible losses until 2021 in many cases.
Right. That was a concern going into the fall. And we were looking at the deadline dates of when you should have applied for the forgiveness, and that we encourage, our clients, we really encourage them to apply before the end of 2020. Knowing that new guidelines were coming out, now that they're here, you're exactly right that people may have to wait and apply on their 2021 taxes and not what they're going to file for 2020.
Speaking of
Our only
forgiveness,
hope is
there's an
that-
open question. Oh, go ahead, Mike.
So the only hope is that Treasury comes up with guidance that really allows it to be picked up as tax-exempt income earlier on the basis that everything has been done in order to get forgiveness, and it's not really a significant act that has to occur later. It's just a ministerial act, or maybe at some point it ceases to exist as a loan and is really something else. But without that guidance, it's hard to take that position.
Carolyn?
So there's an open question. The woman asked, or someone asked, we received our PPP loan on June 1st. When do we have to apply for forgiveness? So the answer to that is it depends. So it depends on what your covered period was. So did you have an 8-week covered period, a 24-week covered period, but no later than 10 months after your covered period? So that's important to know. And speaking of forgiveness, I think it's a good time to tie that into round 2, for lack of a better word. People don't necessarily have to have applied for forgiveness if they're applying for the second round. They just have to have used all the money. So, and they're attesting to that. So I think that's important to note that if you have not applied for forgiveness yet, that's okay. You just have to attest to the fact that you have used it all.
Very important point there. I know we had last year, I dealt with a few companies that had just gotten started right when the pandemic hit, right in February or March. And so they kind of fell through the cracks on some of the programs. Is with the changing of being able to use different timelines, is there any relief out there for businesses that just got underway or were new businesses in 2020?
There are, within the CARES Act and HEROES Act, there are specific dates that we must adhere to. So if they fall within those dates, they shouldn't have a problem because that's what it covers. If they fall after those dates, say you came in and started a business March 16th, unfortunately, you missed it by a few weeks. And unfortunately, we're having some businesses that have started up, there's some new restaurants in New Haven that just opened up, and there's some other restaurants or some other businesses. There's been some pivots, one's closed down one business, but they had to open up a whole nother business, which actually would disqualify them because it's a new business in essence. So we have seen that. There has been no further guidance to see if they're going to extend that. Right now, those are very firm dates that Congress has established.
And obviously,
What's worth clarifying is that they had to be in existence as of February 15th, 2020.
Correct.
Great.
And the more likely they're not going to change that.
Yeah, and obviously some challenges with that. You don't want to just be able to open a business and tap into funding without knowing that it's actual business that was generating revenue. But I know I talked with some businesses who had made their investments with the anticipation of getting started right when the pandemic hit. So they'd also already laid out the cash. Question on timing. We first PPP, was a huge rush to get there. The funds did run out. You never want to delay on things like this because we don't know what could happen with government programs. But I'm getting the sense it's not imminent that the funds are going to run out. At the same time, don't take your time either.
Yeah, I think
No, and
that's
I think-
really good. Go ahead, Brian.
No, and I mean, I'll speak for myself. When it ran out the first time around, but we were amazed at how fast it went. I do feel like it's going slower this time, and maybe Carolyn can speak to that a little bit more.
Yeah, I'd be happy to. There's definitely not that sense of rush. People are literally the first go around. We had people working around the clock because we were inputting to make sure that we got the approval so that we could take care of our customers. There's not that sense of rush and urgency right now. I do have to email into one of my SBA colleagues to see where we are with the dollars, to see how they're being used up. But the whole approval process is different this time too. So the last time we would send in and we would get an instantaneous approval unless there was an issue. This time there's a day or two delay before the SBA sends out the approval. So the whole approval process is different this time, which is not necessarily a bad thing. We've had some situations where they're also reviewing, for lack of a better word, a loan from the prior that people haven't submitted for forgiveness. So, but I do believe that there will be funds around for a while. It does sunset March 31st, but I do believe, and I wish I had the exact numbers. I did try to get them in anticipation of this meeting today, but I haven't heard back.
Carolyn, I had one question that came up with us in the first round. So when you submit to the SBA, are those funds set aside upon your submission?
No, upon approval. As soon as you get the SBA approval. Yeah, and that's a great question. And what we found is, so as soon as you get the SBA approval and you have a loan number from the SBA, those funds are set aside. So it's constantly reducing the pot of money, for lack of a better word. And so that relieves a lot of the angst for the borrowers, because they know that their money is guaranteed. They now have that money. So what we've found, over communicating with the borrowers, letting them know that your loan is approved, and also you have to close within 10 days once it's approved. So there's also that second sense of urgency around it. But we found that just relieves a lot of the anxiety. Once you communicate to the borrower that the loan is approved, they just take a deep sigh of relief. I think one of the things, and I'll do a little commercial for half a second here. I think one of the things that we do really well is not only do we take care of the Chelsea Groton customers, but we will also do PPP loans for non-borrowers. And we found that to be really beneficial. We had folks reach out to them that were non-borrowers, and they became customers because of how they were taken care of. So please pardon my commercial for a second, but I've got a team of 5 commercial loan officers, and I've also got 5 branch people that are also helping with the process, because not every PPP borrower is a commercial lending borrower. So we believe in that one-on-one. That's one of the things that we've drilled into everybody that's working with, because let's face it, a lot of the people, the majority of the loans are on the smaller side. A lot of people need that one-on-one help. They need it from their accountant, they need it from their banker. And we found if you have that partnership, it's just a better process for the customers. And it's not what they do every day. You know, you have Joe Machine, and Joe, he's a great machinist, and that's what he does. And they need help. And so we found having those one-on-one meaningful conversations really helps drive the bus.
That's good to know. Thanks, Carolyn. Well, I'm not seeing any other questions in the chat right now. Feel free to put them into the Q&A or chat. But I guess I'll go through the panel and we'll do one last circulation of just any other topics or things that you would want people to know. And we do record all of these and post them on our YouTube page so that people can continue to go back to this as a reference if they didn't have a chance to join us today. So Brian, maybe I'll start with you.
Yeah, I mean, I think we've covered a little bit, but I think it's worth reiterating. I think there was some misinformation about there that you had to have applied for forgiveness before you went for the second round. You really have to have used or will use all of the money. So if you've done that, then you would be eligible for a second draw loan. I just think that was out there for a little bit, but I think that's been dispelled at this point.
Agreed.
Good to know. Carolyn?
That's huge. Yeah. I agree with Brian. If there's any questions, talk to somebody, talk to your accountant, talk to your banker. First of all, see if you qualify. The funds are there. I mean, obviously, I think we all know the dire straits that we're in. These dollars were put out there to help businesses survive, and we certainly want to see our businesses survive. There's nothing more painful than driving down the street and seeing, how many businesses close. I know at one point the number of restaurants that they've closed was like 600. I'm sure the number is greater than that now. So please take advantage of it. It's a great program, and reach out to people if you have any questions.
Thanks, Carolyn. Appreciate it. Joe?
Mhm.
Go ahead, Joe.
No, I echo everyone's sentiments right now. If you've done it the first time, follow up on your forgiveness, make sure you used up all the money, go for the second one. If you need it, it's there for you. But honestly, if you have all your ducks in a row, don't wait. As you found out in the first go round, this money does go rather quickly. It is a limited amount of dollars. We don't know. Under the Biden administration, he's going to add more in the future. So please take advantage of it now.
Great. Thanks, Joe. Michael Daddio?
Maybe the one slight difference I would have is in terms of filing for loan forgiveness, you might want to wait a little bit until the service comes out with guidance, particularly in terms of how you coordinate things like the credit, the employee retention credit, with the forgiveness. I mean, how do you make the election out of using the funds for the retention credit? Do you need to provide information concerning a net amount of wages that you pay so that you can demonstrate you haven't used the same wages for both the forgiveness and for the credit? If you're in a scenario like that, you may want to just wait till we get some additional guidance.
Right. And Michael, on the ERC, would you recommend holding off a little longer before, maybe updating your 2020 payroll for the federal tax credit, or should people go forward with that now if they qualify?
Well, I would go forward with that now because we know, I think you're going to be doing the analysis concerning whether you qualify, one, and two, what the benefit of that credit is, and whether it's going to eat into what you think you're going to be able to get for loan forgiveness. You want to do that as part of the analysis. Once you've determined you're eligible and it makes sense to apply for the credit, then you really want to do it as quickly as you can. The suggestion was that you could catch up in Q4 in case you were eligible for credit in Q2 and Q3. You could put it all into Q4 2020. Unfortunately, most payroll companies have already filed the Q4 payroll tax return. So you might have to file a superseding return, which could be done until the end of the month, or then have to file an amended return. But I think you probably want to get that credit elected for as soon as you can.
Great. And I'll turn to Mike to close us out. And Mike, you can even answer a question here. There was a question if you can use both the PUA through, that's the unemployment, as well as the PPP.
Yeah, having a PUA doesn't impact your eligibility for PPP in and of itself. So that's not a qualifying or disqualifying factor. So if you qualify for PPP and you happen to have a PUA at some point, that's fine. There's no issues there. The one thing I really haven't heard anybody talk about that we got a lot of questions about early on was gross receipts. How do you calculate it? What method do you use? How do I prove it? What's the bank going to ask me for? We've got a question and answer in the guidance on how to do that, which is nice. Gross receipts, if you want to think of it this way, it's almost every single dollar that you have coming into your company that's not capital gains, sales tax, or income from a related party. So it's interest, it's dividends, it's commissions, it's fees, it's gross revenues. And you calculate it on the same way that you report your tax return. For most people, that's cash basis. But if you're an accrual basis taxpayer, you're on the accrual basis. So again, there's not a straightforward answer, which we've seen very commonly in the program. How do you prove it? There's actually 3 different ways you can prove it. It's in the guidance. If you're cash basis, easiest one, grab your bank statements, add them up for the quarter. Your internal accounting records are also a good resource. Or you could, if you happen to be using an annual comparison of 2020 to 2019, which is allowed, you could do a draft 2020 tax return compared to your actual 19. There's a lot more detail in the guidance. It's on the SBA's website. It's on Treasury's website. It's question number 4 if you were looking for specifically what to have for yourself. And Carolyn or Brian, if you guys want to expand on that or other questions you've had on it, feel free to.
No, I think you did a great job.
Yeah, I think the only thing that I would add is I think with nonprofits, they peg the determination to section 6033 of the Internal Revenue Code. And I think based on our reading, there seems to be a differing treatment for gross proceeds from capital gains for not-for-profits. So that's at least our initial read on the guidance.
And I'll just mention too, because I've seen a couple questions or comments on it. There are state programs. I know some people, that can get confused with some of the other things that we've talked about. There was a state bridge loan back early last year. At the end of 2020, there was a $5,000 grant program through the state that was through their CARES Act money. They were servicing 10,000 businesses. I believe they are still trying to process the last ones of those, but they have been letting businesses know if they were either approved or denied. It was they had more applications than they had grants available. And then the last piece is a restaurant entertainment venue grant that the state is offering with their CARES Act money. And that is, there's not an application process with that. They're going through Department of Revenue, your tax filings to determine who would be eligible, and then contacting based off of that. So that I think they're just underway in that process. So I'm not certain that you would have heard by now, but you can always contact DCD within the state. That is the organization that is running those 2 programs. I'm not certain of a manufacturing grant program. I saw that in the chat. I'm not heard of that right now, unless that's something that was just announced.
And I think one other comment that's probably worth noting, and I think everybody will probably nod their heads, is that the guidance is constantly coming out and we're constantly getting more and more information. I love it when it's interim final rules. So we're constantly getting more and more information to further clarify things. So that comes out. I can't tell you how many emails I get on a daily basis. So just staying on top of all that is really important.
Great. Thanks,
Yeah,
Carolyn.
and it's Friday. It's Friday. That's usually when they issue it. 4 o'clock on Friday.
Yeah, Friday night.
Guidance, and we're also now going like, dang.
Yeah, Friday night.
Spend Saturday reading and responding to the 47 emails that we got because, as Joe said, it could be time sensitive and it could matter to somebody who you said something different to yesterday.
Yeah.
And if you're watching this Facebook Live, like after 2 o'clock in the afternoon on January 22nd, some of the stuff we said might be wrong.
Yeah, tomorrow it could be different. So that's the thing to keep in mind. And that's what really happened in round 1. We actually called it round 1 and round 2. We're actually calling this internally round 3. But so
the word there is
that's
check back
really
in. Things may change, especially as Mike is saying, if you're watching this as a recording. We're giving you the best knowledge we have as of this moment, but it seems like maybe in about 2 hours, a lot of our panelists will be getting emails again. So I want to thank all the panelists for being a part of this. Thank you. Throughout the entire pandemic, you've been really generous with your time to explain these programs. And I know we'll have more questions and things will come up, and we're always can share that with everyone that was here on the panel. So thank you again. Thank you to everyone who has attended. We'll just let you know we do have some more programs coming up next week. We'll have our legislative forum with state senators. So we'll talk a little bit about how we're getting the economy back going, and then our internship career and jobs fair coming up in February. Again, thank you everyone for joining us and our executive orientation program starting next week. Have a great weekend.
thank you too.
Thanks.